All right, good morning. So it's been, I think, about a week that I produced my last video. It has been a crazy week of both working and trading. If you had a rough time this week, you're not alone. It was a very volatile, choppy week. I know one person I saw mention that with the PDT rule changed, volatility may really tick up with a flood of new people coming in, seeing if they can day trade. I don't know if that's true. Maybe it's just the economics of the world. Maybe it's Trump. Who knows? But it's been a wild week. It's been a wild ride. I was still able to finish the week off green again, just trading one 50K account. This is a demo account that I'm trading right now. I want to see if I can just get myself up to 5 take profit trader accounts, but I wanted to test one out first. So this particular week had a 60% win rate, came out with about $1,300. Not bad for three micros at a time. My expectancy only 15. My largest trade winning 1128, largest losing 213. And you can see I had some bumps along the way. When I started the week, well off into the red, little green, red, started to climb, had a big drop, then came all the way back up to finish the week. I traded a lot more this week as well as 86 trades. As even though I say I only trade 3 micros at a time, I will scale in sometimes upwards of up to about 9, most often only up to 6. If the trade is going my direction and I either get a pullback on a flag, or if I enter on what I believe is a good breakout, but it immediately rolls back just a little bit, I'll go ahead and add another 3 just above that green wick on my entry. Because what I find sometimes is you get that quick breakout, it kind of jumbles around for a minute. It pulls back a few points. And if it only pulls back a few points and it looks like it still has the meat to run, I'll add 3 more into it. I'll probably cut that 3 a little bit early just because I like to maintain around 3. It's more comfortable unless it rockets or dives, depending on which side of the trade I'm in. And then I'll try to ride that 3 all up to my target profit just to kind of pick up an extra more. Now, in doing that, sometimes I take a larger trade or a larger loss. I did have a $400 loss instantly somewhere this week. I think it was maybe around Thursday. Yeah, right here, 198 and 213. That was not fun. I was actually up $129 on that trade. I remember I was up 129, 6 contracts. I scaled in on this guy here. So I went in. I scaled in. I was up 129 on 6. Not much, right? Half contract size, up $129. You're not up. It was a little close to 10 points. And I thought, this looks weak. It looked like it might fail. It pulled back, and I moved my stop a little bit. I can't lie. I moved my stop just a touch because it was so bullish. I thought maybe it's just having a small pullback before it rips higher. And I think I extended out to like 20, 25 points on both these. So that was not fun. And then thank God I didn't try to add into that loss because, boy, it ripped the opposite direction. And I did take one. I just saw it. I was like, oh, this is going to dive. So I did a quick 9. I held for just over a minute for a quick 300 pop onto the downside. And you can see how long, boy, 3 to 7 minutes I held these. So I definitely held them into the red. I should have just cut them, probably just at below my entry, honestly. And then I could have honestly turned around and not even needed to go 9. At that point, I probably would have only gone 3, maybe 6. I saw the pressure on. I saw the sellers dive in. This could have been even a bigger trade at a smaller size. And then, yeah, you can see like I did one pop here for 10. That thing popped me out for only $10, not bad. But primarily, you can see just a lot of 3s, right? Just 3s. Occasionally, I'll jump in. This here was pretty good. I saw what was going on here. 47-second pop on this one, which yielded me 11.28. So really, that should have only been my best day if I kept to my 3s, probably like $300. But still, I'll take it. I mean, look at the significant losses right behind that. I was just having a bad day. I couldn't find. I was getting knocked out instantly. 34 seconds, 36, 37 seconds, just getting knocked out. Very volatile, very crazy. But I learned something this week, which is 2 things. I seem to have a lot less fear of just losses. I mean, boy, I took a bunch of losses back to back here to turn around. And once I saw direction, A+ set up, I think it was my only 12 entry of the week in 110. Yeah, pretty much. And, you know, I was able to gain back probably all of these losses in one shot. And it wasn't me trying to revenge trade or anything. I just felt like I thought I had direction. I wasn't getting it. A lot of these were scaling in, right? 9, 11, 11, 11, 11, 7. They all lost. And yeah, so then I go in. So I 3, 6, 9, 12, built in, lost it, flipped the 12, and gained it all back. And maybe that was a risky trade, but I felt confident at that time. And that was in the first a few days ago. I don't even remember what happened exactly on that day. But again, I finished the week green. Only 800 more to finish that 50K account and get it funded. And then I've got 2 more take profit accounts coming up this week. And I may dive into the Apex Bundle 5. I haven't decided yet. I don't know how much I can trade while working full time, different accounts. You know, I used to copy trade all my active accounts at once. I've stopped doing that since, as when I do have a bad day, it really sucks. You know, just the emotional pressure of losing, you know, watching 5, 6, 7 accounts go into deep drawdown, I think was really starting to affect me at this time. So I said, you know what, I'm just going to trade partials, you know, 1 account and just see how it works out. Maybe I build that to 2. And then eventually, you know, if I take 20 accounts, let's say, instead of trading 20 accounts at once, I'll trade bundles of 5, right? 5 accounts. If I lose $200, $300, I'll go to the next account. If I make $200, $300, I'll stop, I'll go to the next account. And that way, at the very least, if you have a bad session, a bad hour, it's only affecting 1/4 or maybe 1/3 of all of your accounts versus every account you have. And then maybe for me, for instance, I don't even get another chance to trade that day. You know, I miss almost the whole afternoon. Anything after really like 12 o'clock, I really can't trade. And sometimes I miss a good section of the morning. But the theme of today essentially is entries and not getting wicked out. That's kind of what I really want to talk about. I'm going to try to keep this video under 15 minutes. So I'm going to speed up here on this part and make it kind of quick. I don't think I'm going to trade today, so I have my chart set up, but I am on a short day, and then I got to head out of here and take care of a bunch of stuff today. So I'm here basically just making a video, and then I think I'm shutting my terminals down for the week and come back next week with more new accounts and hopefully more news. All right, so what you're looking at here is the micros NASDAQ on the 1 hour. And with this heavy volatile week, I picked up some information from another trader who's very successful. And he just had some really very obvious but great insight onto your entries and how to kind of prevent yourself from getting wicked out. And you have 2 options, the aggressive option and the conservative option. And you may have to adjust your sizing proportionately or your risk reward ratio proportionally, but ideally it will stop you from getting either jostled around in the wicks or getting false breakouts. So we'll look at a little bit of yesterday and then maybe into the overnight. And while I'm doing this, to see if I can find a pattern to talk about. We'll start with just the current candles. The first thing is we see yesterday, right? We tried to go up, we sold off, and in the macro, we are in a downward channel. So we have a low. All right, we have really a higher. We have a lower high. We have a low, we have a lower low, a lower high, a lower low, a lower high put in yesterday, and we actually now have a lower low put in again in the overnight, which has happened every day this week. So in the sense, macro trend is we're kind of down. The larger trend, right, the huge, big daily, monthly trend, we're up, but just currently when you're looking at the idea of day trading or scalping or micro scalping, you know, just based off of the couple days and the hourlies, we are in a downward channel. So if you were to maintain that, then you were to say, okay, first thing, semi-biases, you know, I'd be looking for shorts. Now you look at your areas of interest. You know, sometimes I have boxes when I get closer to setup, usually I do, but let's just use the lines that I have on the chart for real ease, right? Because they're all important lines. You have your highs, your lows, your value areas, and your point of controls. And the orange, this is point of control from previous week, which we haven't seen for a while. We haven't actually dipped back into previous week value areas for a short minute here. So it really says that at least in the short term, we are downtrending, meaning that we're going back into last week's movement. So we broke through previous week value area high, the premium of last week, we're now under. Let's see, currently for yesterday, we are sitting closer to the value area low of Thursday. Our overnight low is below everything, and our low of day, we're sitting just above. So there's two things here we could say. We could say, well, we're having a little bit of a consolidation, at which point we might be heading back up. Now, it's not clear that we're just going to head back up and start creating higher highs. I wouldn't count on that. You can look at the EMAs and see that we're down, but we'll even take out the EMAs. So let's take out the VWAP and the EMAs. Just try to make it really simple, almost naked, right? So let's do this. All right. Yesterday's high, that was a lower high. We had our low put in. We had a low here, and now we're here. So yesterday, overnight low and low of day, we're kind of hovering around. We have our current overnight low right now, and we have our yesterday's high of day. We're in a spot where currently on the hour, I don't know what direction we're really going to go in. We do seem to be consolidating, just like we do on previous days, somewhere in the overnight or pre-market. So what I would say right now, if I were looking to take a trade anytime, not necessarily on an after market open, but literally between now and the end of day today, when you can trade futures, what would I be looking for? Well, first, I'm going to look at this hour candle. The hour candle, it did close green. It is, in that sense, bullish, but it lost a lot of its body, right? It's a huge upper wick. So we do have a lot of selling pressure here. We have a very small wick here, which means we have good bullish pressure right here. I mean, if I were to just kind of bring this box over, maybe drop this down some, right? Maybe kind of let's kind of do this right here. Buyers bought up, buyers held, buyers bought up, buyers held, buyers held. You can kind of really see that there's buyers right there. Now, on the flip side of that, we can see that sellers began stepping in here. Look, there's no wick here, right? Usually you get somewhat of a retracement, which is what we're about to talk about. Sellers push this right on down. They've kept it right below last week's previous week's value area high. They're keeping it below yesterday's point of control. And one other thing we can do, if we want to see sort of volume or the volume profile in action, is we can add that in. Right, so we're going to go to the 1 minute chart, which is usually the most accurate representation of your volume area. We're going to bring that from 6 o'clock last night. Got that extended, so let's see what they're doing here. We're going to pull this back some. All right. So you can really start to see a little bit more. Right now in the overnight, this whole area here, this is all a premium area. This is where buyers no longer feel it's worth buying in. This is where sellers are stepping in, right? You have your value area high. Down here, you can see this is the value area low currently, right now. Now the value area low is below yesterday's value area low, and the value area high is well below yesterday's value area high. So oftentimes as your value area shifts over the sessions, the trading sessions, that kind of gives you an indication of, are we going to continue the downtrend or are we going to continue the uptrend? And this week, in this sense, we're currently sitting at last week's value area high. So we've given up yesterday's, and now we're sitting more toward last week's. So we have some good selling pressure here. Now, does that guarantee that we're going to go down? No, not necessarily. But would you want to get long here? Well, probably not, right? That's not where I would want to go long. So if we step this up now, all right, let's go to the 15. Now let's remember the hour, right? On that hour, the last hour of today, we had a green candle that's, I would call it halfway bullish, almost like it's like bullish neutral, just because it lost so much of its upper wick. The next candle that's opening right here pulled back some. Buyers are still holding. It's early in the hour. It's only 15 minutes in. There's a good chance that in that hour, the buyers are going to try to eat back into this wick. But at most, you might find short scalps there, but I wouldn't look for big longs. Let's drop now down to the 15. So on the 15-minute, we had this big push up. We have a big push down. We have a sort of an indecisive candle. We have an okay push. We have an inside candle here on this 15-minute still green. And currently at the 6 o'clock candle, though it's red, it hasn't gotten above this portion of the 15 or this portion of the previous 15. So we're sitting currently what looks like around point of control. This is where 70% of all the action's happening. We don't have really any big buyers or sellers that are tipping this market in one direction or the other. So this is one of those sit on your hands moments. So what am I looking for? All right, well, what I'm going to look for currently is I'm going to sit back, relax if I were trading today, and I would start to see what happens if we can get over this wick at 32.59, right? If we can start to push over this. Now, if we do it in one shot, like if this shot up right now up 259, I wouldn't just take the breakout or anything. If this started grinding its way up and it started touching the door of this box and it kept touching the door of this box, sure, I would put a buy in here, anticipating a high volume breakout, maybe go either to this high node or point of control. Okay. If it just jumps up here real quick, I'm not going to go in on that breakout because the start of it was too low. I'll let it break out, see what it does after that point, maybe have a little retest, maybe have a pullback, wait for a flag, kind of wait for a little reaction, get a better risk scenario set up there, right? Lower risk. On the downside, because we're downtrending, what am I looking for? Well, first on this 15-minute, I mean, it's kind of easy to see, right? You have this easy channel up. So you'd want to start to see lower lows get put in minimally on the 15. It does kind of feel like we're consolidating. So I would be scalping on the short side if I were to short. I'd probably want to give up this big candle here and get through the low of day again. And then we could test current value area low or possibly the overnight lows here. If we break through the overnight lows, sure, then you start looking for previous week point of control. Now, I also talked about a better entry point, and I've been touching on candle setup. Where are the candles at and what are they doing compared to the previous candle? And this is where this little bit of information that has kind of been very interesting, which sort of led me to trade a lot more this week to really test it out. And I mean, could I be better at it? Absolutely. But let's take a few of these off here. All right. So let's just say, for instance, we want to ride this thing back up. I'm not saying this is a trade. I'm not saying this is a setup, but I'm just trying to say, let's ride this back up. So you see at 620, we just opened this candle. This is exactly what you want to see, right? It's almost on, this is the 15. Let's see if we can go to the 5 actually. All right, here we go. This is better. This is what I want, not the 15. So here, the 5-minute candle has opened up for 1 minute. We have a lot of wicks at the bottom. We have very little wicks on top. So ideally, we want to be pushing up. But what you don't want to do is you don't want to just buy in right at the open of the candle, because what you have to figure is just historically, every 5-minute candle tends to retrace back down some. So this is where you can add in, for instance, your EMAs, and you have two options here. You can either aggressively buy as the candle is in the red on the way down, anticipating that you're buying the bottom of the wick. You may not be. You might have to use some type of structure. You could use your EMA if it's touching the EMA. You could try to use the bottom of the previous candle. However, you can see that these candles have been going well past. So you can try to eat into the further wick, like maybe halfway down or close to the bottom, so you can get in the best entry possible. Conservatively, you let it wick down. You don't enter and you wait for it to come back up and break. So here you would enter at 210.75. You're already at 215.50. You see it pulling back on you, but you also, at least you're more likely in the momentum portion of the trade versus not knowing how far it's going to go down. And then where are you going to stop out at? Well, if I were really trying to take this trade, probably 10 points, because honestly, I don't think this is a good pattern to trade in. You're sort of in the middle of both buyers and sellers. So you would maybe go for just 220, right? Let's see. We'll put a little line there and, oh, well, it already hit it. So there it is. So you would have gotten about 9 points, right? Now on 3 micros, sure, that's probably like 50, 60 bucks. But if you're trading one full-size contract, God bless you if you are, well, you're already up almost $200 for the day in about 2 minutes. And just tell me, where are you going to make anywhere between $60, $70 and about $180 in like 2 minutes legally in any other profession? It's probably tough to do. And if you are doing that, you're probably not day trading because your job is way more valuable. Whereas my job is not this valuable. So that's the point here, is when you get into the 5-minute, the 15-minute, and especially the hour, do look for the retracement. Right now we're at 6:23, so we're past the 15-minute. We're 2 minutes up on the 5, right? So I'm not looking at the 15 or the hour yet. So now if you wanted to get in on this run, this is getting very bullish now, you don't want to buy up here. You don't want to buy on this breakout. You actually want to let the 625 candle open, retrace, right? Maybe down to 213 to touch here. Maybe halfway through this candle at 218, anticipate the bottom end of that wick aggressively, and that's where your entry is. Then your short is much lower, because if this thing's pulling up, what you don't want to see at this point is you don't want to see it go below 206, right? That's not momentum. You want to see the wick stop before the open of this body, at most at the open. That would be how I take it. You look at this candle here, and yes, you're right. It did. It would, if you took this candle here, all right, so we pushed up. Now you're waiting for the wick. You get in here. Let's say maybe you decided to get in on 202. Maybe you tried to wait for somewhere around VWAP 197. You would have risked down to 191. That's not very much. At that point, you probably could have risked the bottom of even this candle or the top of this wick or somewhere in between, just to give yourself a little bit of room. And yes, and you can see the buyers are stepping in, buyers stepping in, buyers stepping in, right? The rest of these candles, though, they do maintain not matching the bottom of the previous wick. And that's what you're looking for. So again, aggressive, you're buying on the wick down. Conservative, you're buying once it pushes back up and goes to the green. And now, I mean, if you were willing to hold or scale out 211, now you're up 20 points. Again, look at a full-size contract. Now you're up over $400. And even on just 3 micros, now you're sitting at, close to a full-size contract worth of 10 points, and it's still pushing. I wouldn't have taken this trade. I wouldn't have thought it was going to do all this. But you know what? It's probably just heading back into these value areas. Let's real quick see if we can find that value area high again. And let's see if we get a hold. Okay, we're hitting value area high right now. So let's see if this pushes or gets a little bit of a retracement, right? And there you have it. Now, I'm not saying it can't break through it, but if you look here, each time it pops just a little bit above, except for this one here, that was pretty nice. That was maybe a news candle for somebody. And then it starts to pull back. So if you did go in, that could have been your target profit at 236. I usually like to front run on runs like this, just because this was sort of in the middle to me of nowhere. I wouldn't have usually traded somewhere between point of control and value area high like that without something more conclusive. But if you took that trade, you should not be curious or not understanding of why you're getting this pullback. Each time it has gotten into that 236 level, it has come down. At some point it will break it, that or it will fully reject it. But now you're heading right back to essentially opening. And at this point, yeah, there's really no, that was the trade. There is no trade at this point. We're at 627. So now you would be waiting for the next 5-minute candle. And if you were going to be bullish on the next 5-minute candle, I wouldn't want to see it really dip back into the 200s. Like at most, I would say at most, maybe it comes back to the 14, maybe VWAP. But that's still, I mean, that's a lot on a retracement. You would have to wait for a flag. If you're momentum and just looking for this thing to pop, you're going to want to see a retracement from this candle here, come down, ideally with the kind of being a doji candle here. I could see it dipping down a little bit below it, but you want to see it rip back up, right? And then you could try to take the breakout, but I wouldn't. I would literally wait for more substance before a long. I want to see longs get through here with a lot more meat, and I would actually be looking for longs up above probably the 260s. You know, better yet, probably the 270s. Then I have a lot more confidence that we'd be going to like the 320s. Here, I don't necessarily. I mean, you could short too. I wouldn't necessarily do shorts at this point just because it feels like it's consolidating, and we don't know how long it's going to consolidate before it starts to move up. So I'm just looking at it from a 50-50 perspective, and I'd rather have more of like a 60-40 or a 70-30 perspective of like, oh, 70% of me feels like the direction is going this way. Whereas right now, it could retest highs, it could retest lows. I don't have enough evidence in the chart to tell me what. I just wanted to talk about that wick. I want to talk about that entry and try to help you that may be struggling, especially in this week, from getting stopped out or taking big losses, and also understanding when to exit. You know, how to have these volatile markets work for you. Also, don't be afraid of only taking 10 or 15 points. It's also why I took a lot of trades this week. Instead of trying to get 20, 30, 40 points at a time, which everyone loves, including me, sometimes feel really good about getting multiple 10, 15 point entries. That stuff really adds up. Again, even at 3 micros, 10 points, let's say that's like $70, $80 or something like that. Well, times that by 5 trades, right? The risk is a lot lower. If you are in the red, it doesn't feel that scary. You know, if you lose $70 or $100 on a 50K account, you feel like you got all day. How many times did you have to lose for that to really blow your account? But if you can get 4 or 5 green trades in that day, you're stacking up on the hundreds. And if you are copy trading, you're getting close to the thousands, right? And so just remember that. Small gains, big wins. I've talked about that before. And I think for me this week, I took a lot more trades than I normally do, but it felt good. It didn't feel like I was just throwing stuff out there. It felt like I was looking for a lot of small base hits. And I would say overall it worked out. I'd like to improve next week, but we'll have to wait till next week and see what we can do. All right, on that note, I'm closing out. I wish you a good trading day. I wish you a good weekend. We'll see you next week, and let's be green.